Welcome back to the Traders Network. I'm Michael Yorba, your host, broadcasting to you live from the Dallas KFXR 1190 AM studios, and also streaming to you from yorbamedia.com. All right, Nick Santiago, President, CEO, In the Money Stocks. Nick, welcome back to the show. How you been?
Great to be back, Michael. Thank you for having me.
My pleasure. Okay, first up, Apple. What's going on there?
Yeah, well, I mean, if you remember, even a couple of weeks ago, even last week, we talked about Apple, and I was telling your listeners, don't buy into this Apple hype. This is going to pull back to around $530.
Yep.
I think at the time we talked about it, it was around $570. So we're at $536 now. So that little prediction is coming to fruition, and I think traders still want to be careful around that level. There could be short-term bounces. But overall, Apple's going right to the projected target, despite all of the media noise.
And it just crossed that 50-period moving average, what we talk about every so often. I think that's what's up, 540 on the daily basis.
Yeah, just crossed that to the downside, and that is around 541, correct?
All right, so give us time frames, and you said target. Give us an idea of another target, where you think it's going.
Well, we're going to have to watch what kind of pattern the chart forms around this level, around the 580 area. That's going to tell around the 530 level. That's going to tell us a lot more. If we get any kind of a bearish setup, Apple actually can go back down towards 500 and possibly even lower. Mm-hmm. But I do think probably sometime next week the stock gets some kind of a technical bounce just due to the oversold condition. But it's going to be really more about the chart pattern over the next couple of weeks that tells me what the stock's going to do. Okay.
All right. That sounds good. One, certainly not to leave this one out, JP Morgan. What's going on there?
Yeah, JP Morgan really coming under pressure again. If you take a look at the reversal bar on January 7th, I mean, we have a real nice down candle there, nice outside day, we call it, or an engulfing candle. JPM, while it's in an uptrend still, because it's trading above all the moving averages, it's starting to look a little bit vulnerable here. I think traders should be prepared for a little bit more downside over the next few days, but the stock will have short-term support around 55. That's probably where it will get a technical bounce. But this stock I use as a market barometer, and it's telling me, I've said it last year. I said 2014 is not going to be the bullish year like 2013, and it's telling me we're going to hit some headwinds in this market. So I think it's a stock that everybody should follow, and as you know, Michael, we've been following it on your program for probably a couple of years now.
That's right. No, and you called it right on the money too, not just in the money. No pun. So about a 5% pullback on this thing, you thinking? I guess.
Yeah.
Okay.
I'm thinking about a move down to 55, and then we'd have to watch the reaction there. But there is a fair amount of support at $55 for JPM, but I expect it to get down there.
Are you looking for any kind of a short-term bounce to short into on this thing?
Potentially. If we get the right chart set up after these support levels are hit, I think the entire market could be a short, but that still could be, a month or two out.
Okay. All right. A new one on the show, BBBY.
Yeah, I wanted to talk about Bed Bath Beyond. This is one that we took a scalp trade this morning right around the opening bell, and we captured it for a nice quick gain. But this stock right now is telling me there's some problems in the retail area. So this is a leading retailer. The stock, just yesterday was trading at $80. Now it's trading at $68. This probably has potential downside to around 64. I suspect it will find some support around 67. But traders that are out there, don't look to get back into this equity until it gets to around $64.
That's quite the move that we experienced here today. So pause for just a moment. You saying this is a tell for the retail industry. Are you expecting a drop-off that looks like this stock in the entire industry?
Absolutely. I mean, just yesterday, Macy's came out and they laid off 2,500 people. I think they shut down 5 stores. Even though their numbers are very, very good, you can see all of these corporations now are really going into cost-cutting mode to try to keep profits in line. We're coming into earnings season right here, which I think we're going to have a pretty disappointing earnings season for the most part. Not that earnings have mattered for the past 5 years, but now that the central bank is starting to taper its quantitative easing program, which is $85 billion a month, they're cutting it by $10 billion a month. this is going to start to put the focus more into earnings, and I think that traders want to be aware of that.
Okay. What about this Panera Bread?
Yeah, Panera Bread has been a major winner, and I wanted to bring this one up today, not because it's one of those stocks that everybody has to own or anything like that. And the stock technically is still in an uptrend, but when you get a reversal day like this on Panera Bread, that is not a pretty sign. Today the stock is trading down by $4. It's still in an uptrend, but this is what we're starting to see more signs of, more market leaders that are having these big distribution days. When you get a handful of these distribution days of leading stocks, and Panera Bread is a leading stock, that's telling us that, be careful in 2014. I don't mean to sound off the alarm bells, but I really have no choice. I'm a straight shooter when it comes to levels and it comes to stocks, but I'm seeing lots of distribution in here.
Okay. All right. Are you expecting an orderly move towards the exit, or at some point in the near future, kind of a bottleneck there at the door with a little panic?
Well, I think ultimately we're going to get some panic. But in the meantime, the way the institutions like to feed it out to the marketplace is slow and steady.
Mm-hmm.
So they can't just go in and just dump everything in a single session. They just have to feed it out, especially when you have such light volume markets like we've seen. I mean, the volume today on the S&P 500 spiders is just 73 million shares. So we're struggling to even test 100 million shares this year so far in 2014. So these institutions, they're not dumb. They got to feed it out slowly but steady. And I think we're starting to see that more and more.
Yeah, my numbers are telling me that this could very well give us our some kind of a very excitable end of the month pullback. I mean, some kind of a splashy end of the month negative bias. I wanted to bounce that off of you and see what your thoughts are.
I kind of agree with you. I really do. I think that we've already started a slow descent on the downside, but I think right now it would just be a pullback. The markets rarely have a big down January. January, for the most part, is usually a bullish month. Mm-hmm. Although this year I'm not so bullish on January. But I don't see a hard collapse. But I do think we're going to get some volatility in here and some choppy tape.
Okay. All right. What about Chevron, CVX?
Yeah, Chevron had a huge decline yesterday. It was a pretty nice sell-off on volume, too. So the stock dropped pretty sharply yesterday. Today it's only down 10 cents after really making a dramatic bounce back. But when I see this kind of activity in a leading integrated energy play like Chevron, that tells me the institutions are, again, feeding the market. They're selling out a little bit, and then they're driving it back up on lighter volume, then they're selling it out again. Overall, the Chevron chart doesn't look bad, but I couldn't get involved with this equity just yet until it gives me a better pattern. But a level that I do like for Chevron would be all the way down at 116. Until then, be careful with this equity. I'm not saying it's a short play at this stage of the game, but I am starting to see how these institutions are dropping the stock and then lifting it back up on lighter volume. And you can just see that, a clear case of that today. Yesterday, the stock declined on, I believe it was 8 million shares, 8.2 million. Today, it's really rebounded pretty sharply on 4 million. When you start to see that kind of activity, that's just telling you more so that the institutions are slowly feeding out stock.
Okay. All right. 116 is a pretty decent run. I mean, that's a November low, but from where it is here, that's going to give us a significant break of that low that occurred about the middle of December. And that's going to put a little spookiness in these people.
Absolutely.
Yeah.
And that's what I think traders have to be aware of. We're going to get good opportunities this year. You're going to get a lot of good buying opportunities on some hard sells, but I think we got to be prepared in 2014 to see a lot of market-leading stocks have these hard declines, and you're going to have to know where the technical levels are to be able to pick these up and make money.
Okay. Real quick, we just got about a minute and a half left. Some numbers for the S&P, and then tell me about the trading room today.
Well, the numbers for the S&P that I'm looking at right now, if the spiders do decline, we're going to have a lot of support on the S&P spiders around the 178, 178.50 level. If the market does fall here, the cash index would be around 1785 or so, just give or take a couple dollars. But right around there would still be pretty good near-term support for the overall S&P 500.
Okay.
Trading room was dynamite today. We started off with a a Bed Bath Beyond scalp trade for 50 cents. We had about 3 spider trades as well, and my partner also caught a couple of small caps. So anybody in the trading room is very, very happy today.
Yeah, that is no surprise here. You do so good. Amazing. All right, before you go, contact info so these guys can get in there and start trading with you.
Yeah, they come on over to inthemoneystocks.com. Take out a 7-day free trial to our intraday stock chat. You could basically communicate with us all day long, get to see our charts live and get all of our trade setups. I also put out the morning gap trades at 9 o'clock in the morning. So anybody that's interested in just trading, we have traders now, Michael, that only come in for the first hour of the day. They make their money and they go home. If that's not a bad job, I don't know what is. If that's not a great job, I don't know what is.
No, it is. Now, you also do something on Saturdays where it just lasts all day, too.
Yeah, on Saturdays, one Saturday a month we do in the Money Stocks methodology webinar, and twice a week we host. In fact, I'm hosting a live broadcast today at 5:15 for all of the In the Money Stocks Research Center members. So if you want our swing trading setups or cycle trades or anything that we do nightly, come on over and take a free trial to our research center. You'll get all of our setups there. And twice a week, we'll go ahead and have an open format for all the traders to come in and ask as many questions as they want.
All right, Nick, thanks so much. We'll see you next week.
Have a great day, Michael. Thank you.
You too. Nick Santiago, President and CEO in the Money Stocks. This guy's been threading the needle from 1,000 yards out for a long time here.